currently under contention. The ministry, in a statement, says the BOA Group has no leasehold over the site. That's the site 2534 ML, and the BOA Group should desist from illegal extraction of marble and limestones from that particular location. The mining ministry reminds the operators within that sector to respect the provisions of the Minerals and Mining Act of the year 2007. Everybody keep to the law. That's the straight from Fayebi's ministry. Okay, let's look at the markets. And of course, you've seen this already. The Nigerian stock market is on steroid. The market is defying what you call the January effect. That's what that terminology means when stocks begin to taper off in the weeks leading to December and into January. Nigerian market is defying that. So we rolled past 38,000 yesterday and we crossed 37,000 by 75.30 points. And you can see 1.5% gain on the all-share index. The market cap also roared to 13.608 billion. One of the most aggressive stock markets we've seen in recent years in Nigeria. Now effectively, we're 45.40% index return since the year 2017 started. The market is roaring. In terms of equity cap that you see there, the market is about 47.2% in the green year to date. Net value for the market, $44.40 billion US dollars. Yesterday, $20.2 million of shares were traded, slightly lower than $20.9 million we traded on Tuesday. So this midweek report is showing you that the market is currently on a strong trajectory. Price to earnings, 13.1 multiples. If you look at the price to book value of the market, 1.7 multiples, and the dividend yield average for the market, 3.3%. And that's a very nice way to see portfolio investors ramping into the equities market. Take that away. Look at the NESE unlisted securities market, where you have the USI index also making a comeback, 0.82%, sharing the Santa Claus rally on Market Street. So the NESD added almost 1% on Wednesday. 618.64 was the closing level for the USI. The market cap looking at 420, 418.65. Volume was also stronger than Tuesday, 31.85 million, and the net value 359.3 million local currency. The oil and gas market was sluggish yesterday. All the major, big seven, were quiet on the day. Nigerians were beginning to see a bit of the petrol scarcity. Now the marching order to let things taper off. But let's spend a few minutes quickly here to get Michael Famoroti, who is the chief economist at Vetiva Capital Management, take one or two questions to us. Michael, good morning. You've seen all the sweet news about the market, haven't you?
Morning, I have indeed.
Yes, you have. It's a time for broad smiles for those of you who are heavily invested in the market and who are asset managers and fund managers. This is a very good time. But put some macroeconomic stories behind this stock market currently on steroids.
Yeah, thank you very much. It's really early days, really, to tell. I mean, the market for this year has been quite positive. It's been a very good year. Like you said earlier, we're 44% up. But December has really started strong. The most notable change, apart from the fact that we're about 3% up already, is how market activity has really shot up. So market turnover so far this month has been around 7 billion naira a day, compared to about 4 billion naira average in November. And that really signals the presence of foreign investors. In terms of the macro space, the most notable change in the last 2 weeks was the OPEC deal. For Nigeria, that is a positive deal because it's expected to support prices for most of 2018. And despite the fact that we were included in the cap, we should still have some headroom to grow production to desired levels. So if you're looking for macro drivers for the increased interest in the market, I won't look too far from that.
Yes, yes, I'm not likely to look far, but can we take our field glasses and look a little bit further afield? If we can see something from the fiscal space, apart from a very nice global oil market story and capital importation, is there anything we are doing in the field of macroeconomy, in the field of business, that you think investors are saying, well, the currency market looks very interesting and appealing, but I think the government at the center is doing something that adds some confidence to my bringing my money into Nigeria?
Well, we do think that 2017 has been a better year, and that's reflected in the GDP numbers. I mean, probably the most memorable story about how the government has changed things is our improvement in the ease of doing business ranking. So overall, if I were a foreign investor, I would be a lot more confident in policy. On the fiscal front as well, I mean, the successful raise of about $3 billion in Eurobonds 2 weeks ago at a very good prices, or indicates the confidence in the economy, despite the Moody's ratings downgrade. I don't think there's anything that has changed significantly in the last week or so on the fiscal front or the business front to really sort of prompt this sudden surge. So I would just attribute it to the dynamics of the oil markets and the December flavor, given the sort of strong year that we've had so far.
Quick one, as we wrap it up. Do you see the market giving way to what you call the January effect anytime between now and December, perhaps in the first few weeks of the new year?
Well, yes, so we expect December to be strong. You look at historical data, and for the last 3 years alone, the market lost significantly for the last 3 years, yet December, the market was up at least 5% each time. So as portfolio managers and other factors really bear, we expect the market to be up. Similarly, January, the first couple of weeks is normally a sort of tricky period. Portfolio managers play a big role there as well. And yeah, we do expect that after a strong December, the market should cool off. That said, there are a couple of economic factors that could hold sway. For example, the 2018 budget passage target is the 1st of January. We still consider that ambitious, but should we see serious traction in the early parts of January, then that could really drive market to another strong performance.
Michael Famoroti, let's leave it there for today. Thank you very much, the Chief Economist at Vertiva Capital Management. Let's come back after the break and we'll go back into the energy sector and what's in it for consumers at this point in time. We'll be right back in 2.